Hello everybody, we'll get started with the technical analysis webinar at this time. Before we get going, just give me a quick okay in the chat box if you're seeing the screen all right and hearing me clearly. All right, great. I've got enough responses. We're good to go. Thank you. All right, so not a lot happening today, but there are some nice movements to take advantage of. There's some news coming in later today out of the US, maybe some other announcements. We'll take a look fundamentally what's coming in to help maybe create some more volatility and movement. There's been some selling off a bit as expected on some of the equities here at the end of the year. Some movement in gold in response. So there's been some opportunities there today, quite a bit actually in terms of opportunities, and we'll take a look at what could have been done and what still could be in terms of opportunities the rest of the day and into next year. So as we get going, keep in mind no investment is guaranteed to profit. There's risk involved with all the investments, whether you're investing in real estate or whether you're investing by trading Forex, CFDs, spread betting, options. There's risk involved, but also there's good potential for profits as well, which is why we're all here, obviously. Now, as we go through things, keep in mind that what we're covering is meant to be from an educational perspective and not to be taken as financial advisement. But certainly what we cover can add to your knowledge base, help you maybe perfect or start to build a strategy that hopefully you can find some long-term success with. Our full risk disclosure statement can be found on AvaTrade's main website as well if you care to read through it. One thing to keep in mind, as long as we're talking about risk, you know, we have through the AvaGo app, and I'll show you where you can download that maybe. It's on our main website. The AvaGo app, if you get that on your mobile device, has a feature on it called Ava Protect, which is coverage against losses during a defined period of time on the trades that you open. This is available on gold, silver, all of the FX, maybe some more assets eventually. As you open the order window using the AvaGo app on these assets, you'll see if Ava Protect is available on it. It'll show down where you put your stop loss and take profit, where you can program the different parameters of the trade. You'll see Ava Protect as an option as well. It's a pretty nice feature. It's unique to AvaTrade. And so what you'll see is for a defined time period and for a flat cost that's there. And now the cost changes with the market volatility, but once you take the coverage on a position, you know what the exact cost was going in. And if it's much less, and many times it is much less than maybe where you would have put your stop loss anyways, in terms of the amount you were willing to risk, then it's kind of a no-brainer maybe to use the protection, because no matter how far it goes the right way, your only cost for that protection is the flat fee that's shown to you in the beginning, and the rest of the profit is all yours. And then no matter how far it goes the wrong way, your only risk during the covered period is that flat cost again at the beginning. And so especially during days where you have a lot of volatility like we're seeing today with some of the assets, it's a nice option to go with Ava Protect sometimes if it fits into your strategy and your trading plan. So have a look at that. If you have any questions about the Ava Protect feature, by all means ask or be in communication with your account manager as well. So today we're going to focus on technical analysis. And, you know, on a day like today, technical analysis alone, without even looking at fundamental news, could work very well, especially with some of the assets that we'll take a look at. I'll show you how well that would have worked using simple, basic manual technical analysis strategies. By manual, I mean drawing your own lines, your own price levels, your own trend lines, etc., to find entry points and exit points that might be optimal for your strategy. And so we'll go over how to do that today. And you know, just a quick look before we look at any fundamental news. We were looking at gold earlier in the week. We saw a strong climb up and then a leveling off. And we talked about the fact there could be a breakdown, But we also said that if it goes above this resistance, you could have a buy stop ready above. And so we see it did go through the resistance. This upward movement would have paid well on a buy stop. And if you had sold on a market sell, which we were talking about at the time, looked like it might make sense, you'd have had a small loss on the market sell to your stop loss above the resistance. And then look at how much profit you could have already made on the buy stop with the breakthrough on gold. It went up from 15.15, which was the breakthrough spot. Your buy stop might have gotten in at 15.16, and it peaked up here around 15.25. So easily $8, $9 profit rise on a buy stop could have paid off very well with a simple technical analysis strategy that we went over yesterday with this resistance line that we drew in the webinar yesterday. And this was yesterday evening. It was a later webinar last night UK time, 6 p.m. start time. And so very simple strategy, a 1-2 move, give yourself a shot. In this case, we were talking sell on gold. That didn't work out. Hits your stop loss, boom, breakthrough candle. That's a traditional breakthrough candle. We can see it. It's larger than the other candles. It's what you expect many times when a resistance level is broken, like right here, breakthrough candle, here, breakthrough candle, here, breakthrough candle, here's another one, and then here's another one here. Breaking the resistance levels on the way up. Simple buy stops pay well. And in this case, you could have been wrong on your initial move, took a small loss to your stop loss above the resistance, and boom, nice profit on your buy stop. You could have still been in it or gotten out already. Most people probably would have gotten out once it consolidated and started to go sideways here. The upward momentum's gone. It's consolidated and going sideways. You get out maybe around 15.24 or something, 15.23, and you've got a nice profit on the buy stop. Type OK if you're with me on that 1-2 setup, technically speaking. And hopefully some of you were here in the webinar last night and profited on it. All right, great. If there are any questions, let me know. I recognize some names. I hope some of you did that double setup last night. That would have paid well today as it broke through to get your buy stop in the money. Okay, so that's gold, and we see it went flying up. What do you think the equities were doing? Dow Jones, NASDAQ, S&P 500, CAC 40, FTSE. Let's look. Dow Jones, down today, right? So, or this is the NASDAQ, sorry. NASDAQ down today. As gold went up, NASDAQ pulled down. It's okay. It happens. A little bit of a sell-off before the end of the year here. It's somewhat expected. We talked about it yesterday. We saw this dropping yesterday, and then we see more hold, tried to rise up and right back down. So right now we see a support level here. Okay, that's a really nice support level. That goes back to the 20th. So it broke through on the 20th, and since then support, all the way up, back down, tested it, but became support again. And here it is just above the support level. So if you're looking for an opportunistic move here to the end of the day today, the trading day, what might you do? It's on a support level. Did we really have bad news today economically? I didn't see any, right? We'll take a look at the fundamental news in a second, but I did not see any bad fundamental news come in today. Nothing that would warrant breaking major support levels on the NASDAQ, right? Doesn't mean it won't, right? It could break the support, but if you're starting to combine fundamental news with your technical analysis, sometimes that helps you out. So one potential move here then is market buy off this support. That's an opportunistic entry point if you think the NASDAQ should go back up. If you believe the NASDAQ should go back up, there's not a much better entry point than that, right on the support level. After a nice drop and pull back down, you've got potential to trade up off a support level here. And indices, by the way, if you don't trade indices, you might be missing the boat quite a bit. Now, I'm not saying don't trade other assets. Certainly, there are lots of opportunities with lots of assets, but indices have huge potential. I mean, the NASDAQ is moving, 100 points or more in short periods of time. If I start to lose my voice today, I apologize. Still fighting through a little bit of a cold here through the holiday season. So, all right, so coming up off of support right now, and Paul, you're saying maybe put a sell stop below the support. I like the idea. A 1-2 move again, just like with gold, right? The gold was the opposite yesterday. Market sell, buy stop above the resistance. Now this is market buy, and you could set up a sell stop below the support. Okay? So sell stop if it breaks the support by, and you determine how much does it need to break the support by before you get in. Okay? Whatever you deem significant. So if it breaks the support, you could get in on a sell stop. And so you could have your stop loss right down here at the same spot that you get in on the sell stop. Okay? So if it breaks the support, hits your stop loss on the buy, you could get in on a sell stop, second chance at a profit. Now, it's not guaranteed to work out like the gold one did from last night, right? Gold worked out nice. The market sell reversed, stop loss, open the buy stop, boom, 3 or 4 times the size profit as you lost on the market sell. Nice setup. Okay, it could happen again. This could go up. The potential here, and that's what trading is about, is potential, right? The potential here is at least to this support level, right? Support, support, breakthrough candle. If this is going to reverse, it easily could quickly come back up to that first resistance level, right? Which would be another 40 points up. That'd be a nice scalp, 40-point rise on the NASDAQ. You know, if you have a sizable position, a 40-point rise on the NASDAQ pays quite nice, okay? So you could take a potential shot here, and your risk is less to your stop loss, and then you take a potential shot with a sell stop in case you're wrong to get a second stab at it if you like that idea, okay? So I think this sets up nice. If you're already in on this, it's been climbing while I've been talking here, so it's trying to push up right now. If we look at the Dow Jones, it sets up very similar. Support level here. Support, 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 trying to bounce. So you could be looking at a potential pullback up. And yesterday, by the way, our breakthrough happened. Breakthrough on the support here, continued all the way down to the next support level. So we could be looking at potential bounce back up. Pay attention to when the market closes today. It closes a little earlier than usual. Unless you want to carry it through the holiday. Remember, you could get some gapping. If you leave a position open when the market closes this evening, it won't reopen again till after the holiday. Could gap way up. If you're on a buy, great. Or could gap down, could gap against you. So if you don't like the unknown, you might, if you're scalping, make sure you get out before the market's closed today. So potential climb here. I crisscrossed my lines. Let's see if I can get my line fixed. It's okay. So we've got potential bounce off the support, and if it breaks through, we'll do the objects list because I don't like these other lines that are there. Let's get rid of them. Those are old ones from yesterday. It came to fruition, that those old lines from yesterday, which is nice. Okay, so let's redraw our potential support right about here. I mean, redraw the support, not potential support. Okay, and then we have a potential bounce occurring here up and retracement up. Really nice potential for a climb here. Wow, my platform, there we are, wasn't cooperating to draw these lines. Okay, so there's the potential climb up. If you're wrong and it breaks through, you've got a backup if you wanted to set up a sell stop below the support. Okay, now certainly if you believe it's going to break the support more than climb, you don't have to do the market buy. You could just put the sell stop, and if it breaks the support, you're in. So I don't mean to guide you and say you have to do a market buy backed up by a sell stop. If you believe in the breaking of support more than the bounce, you can just set up a sell stop and wait on it, or vice versa. You could just go with the market buy and not do the backup sell stop. But it is a nice strategy that we've seen work quite a number of times to do the 1-2 move. Okay, so someone's asking for natural gas, so let's take a look. And by the way, let's look at oil, as long as we're going to do that. Here's oil. What's oil doing? 1 hour candles. I see downtrend, right? Overall. Low points getting lower if you count the wicks. High points starting to get lower. So oil had a little bit of a sell-off here at the end of the year. I think that was pretty much expected. Oil rose quite a bit, pretty fast, and it's down around 61 now. It even could move quite a bit more today. So I see a broken support level on oil here. Okay, support, broken support here. Okay, it's back above that support, but it already broke it. So you could see some continued movement on oil that could be significant. Now, let's take a look then at natural gas. Usually natural gas and oil tend to move the same direction. So I wanted to take a look at that. And so here's natural gas. And we see it's true. They moved the same direction today as well. So, boy, my tools are not cooperating. There we are. It's taking me 2 clicks each time, or 3. There we are. So natural gas also pulled down to the support level. Support, and predictably stopping on the support. There really hasn't been a lot of breaking news today for in your mind maybe for you to expect major support levels to break. Doesn't mean they won't, but you have good potential for this since it's on a major support level and you're catching an opportunistic entry point if you think it'll go up. That's not a bad shot to take. Where might you put your stop loss on this? Where might you put your stop loss if you trade up off this support? Just below the support level, right? So below maybe this wick right here. This was the lowest point below the support. So you might put a stop loss down around 2.16.3, 2.163, something like that. 2.16, which would be below this support. And the potential climb, and this, you might think about holding this even through the holiday, right? If it doesn't break the support and you're in the money, the potential for a bounce back up. Look where the ceiling is. The recent ceiling is up here. Okay, so the potential climb from entry point just above the support up to here is from 2.175 to 2.225. Okay, we're talking potential climb of like 8 cents, which doesn't sound like a lot. That's a lot. A potential climb of 8 cents and only having to risk to your stop loss maybe 1 cent or 1.5 cents, depending where you want to put your stop loss. That's not a bad idea. So those of you asking to see natural gas, it really looks like a nice setup to take a shot into the new year. If you're bullish on natural gas, it's a nice entry point because it's on the support level. I'm not telling you natural gas has to go up, but if you're bullish on it, that is technical analysis speaking, a nice support level. And just from a mathematical perspective, it looks nice to take a shot at a buy with a potential climb to the first resistance level much larger than the risk below the support level. Okay, so if you're risking 1 cent to make 8 cents, boy, if you take a sizable position, you could make a killing. Someone's asking how much is 8 cents if there's one lot. Let's open the order window and take a look. if my, I think my mouse key, I've overused the double click on my mouse. Here we are. So every asset will show you in the order window the asset name and what one lot is equal to. So one lot is equal to what? 10,000 units. 10,000, right? So if it goes up $1, you make $10,000, right? If it goes up $1, you make $10,000 because one lot, if you have a one lot position, you have 10,000 of them. If it goes up $1, you make $10,000. If it goes up 8 cents, you make 8 cents times 10,000, right? So what's 8 cents times 10,000? Here, let me pull out my calculator. 8 cents, 0.08 times 10,000 is $800. Okay, I beat you, Paul, by a second. Okay, so $800, that's pretty significant for a small potential climb, or not small climb, but a small time period potentially to make that type of profit. And by small time period, I mean it was only yesterday that it was up 8 cents higher up here, even 9 cents higher. Okay, so the recent history, only going back one day, a small time frame, shows you the potential for that price. And has anything changed in the market really, other than kind of a preconceived sell-off because it's the end of the year? There's not really a lower demand today for natural gas on the markets compared to yesterday in terms of consumption of natural gas. I doubt that's the reason natural gas dropped. It most likely dropped just because it's the end of the year. People like to sell off assets sometimes. So you might wait and see if this support breaks, but before the end of the day, if it's still respecting the support, you can take a shot at a buy if you think it'll go up. And that's a small risk to your stop loss down here. Or you could put a hedge if you really believe in it. Put a buy stop down there, you could hedge it if it breaks the support instead of stop loss. And then that way you can stay with it if it goes the right way. Certainly we could see some gapping one way or the other through the holiday when the markets reopen, and potentially you could gap in your favor and go quite well. Obviously it could gap against you too, so you keep that in mind. Any questions on that? Or how to calculate the trade size potential profit? You know, natural gas, Ava Protect isn't available on natural gas, but if we're looking at gold, it certainly is. If you're trading on gold and you've got a one lot position, right, that's 100 ounces, right? Let's take a look. Let's bring up gold again. Here's gold. If we open gold, we see one lot is 100 ounces. So if you did a one lot position on gold, let's say you think gold's going to pull back down and you sell on gold, right? Large potential profit if gold pulls back down. But for every dollar it goes the wrong way, if you have a one lot position, you're risking $100 because there's 100 ounces in that position size. So if you look at Ava Protect, you might say, wow, for 2 days coverage, which would get you through the holiday, and if it gaps the right way for you and runs the right way, wow, what a profit. If it drops, I don't know, $50 in the price of gold or something, it's possible because gold ran up so fast. If that happened, I'm not saying it's going to, but if it did, great. The cost of the coverage would be minimal compared to that on the Ava Protect through the AvaGo app I'm talking about. And if it goes the wrong way and runs up $50, which I know a lot of people going into January feel gold will keep climbing, you could cover your risk for a flat cost with Ava Protect for 1 day, 2 days, 3 days, whatever's being offered with the protection. And so you could risk a known amount that's acceptable to you with that coverage for unlimited profit potential at a time where you think there could be a huge movement. That's where that protection makes sense. Okay, so take a look in the AvaGo app if you haven't checked that out. It's really nice. And obviously I could have used the opposite example. If you're buying and you feel the potential to run up, you could have Ava Protect cover you if it drops. I'm not picking a preference here for you. You certainly could believe the opposite and do a market buy and then do the protection on the drop. Yeah, it is, Ebert. It is nice. Just go to our main website with your mobile device, or go to your app store, and you can download the Avigo app. With a quick search, you can find it in your app store. Okay, great. So I think we've probably covered the assets that we're moving the nicest today. We've got the indices with nice movement on it, nice support levels, whether it's the NASDAQ, the Dow Jones, the FTSE pulled down also today. And if we go to like 4-hour candles, we see also a support level that's not that far away. Okay, here's a support level here on the FTSE. Old resistance, old support then it became, and this one doesn't set up as nice because it's still further above the support, right? Technical analysis wise, it's not like the Dow and the NASDAQ and the S&P that are sitting on the support level. This one's above it, right? So maybe from a technical standpoint, not set up as nice for a buy. If you believe in further dropping, then maybe this looks nicer for a drop because you've got room before it hits the support level here. But pretty much the markets were all moving the same way. And here's crude oil again, finding its support level, but having pierced it already once. I maybe don't anticipate a lot more movement on oil today, but I believe gold and the indices have a pretty solid potential for some nice movement. Someone was asking about the pound earlier. Let me take a look. GBP USD. Sure, let's take a look, and then we'll call it quits, and I'll wish everyone a happy new year. Here's the GBP USD, and look where it's stopping right now. Let me show you something. Look at this resistance level. Resistance, right here, resistance, breakthrough candle. It took a huge amount of momentum to break this resistance. We see it, breakthrough candle, back down. It drops below that price, and look where this run up just stopped. Look where it stopped, right at that resistance level. Textbook, right? So the GBP USD looks to be bullish, but it looks to have met a nice resistance level. So take your pick there. You could trade on a pullback down. I tend not to like to trade against the momentum necessarily, but yeah, the pound looks like it's been very bullish in the past 4 to 8 hours, but it met the resistance level. If I had a buy position through the day today on GBP USD, I might have profit took already. Before the holiday, it reached the resistance level. It looks like if you were thinking to buy on GBP USD, you probably would have been better off doing it earlier today. Right now, I think it's 50-50 whether it's going to break this resistance, right? And most likely, the largest movements of the day have kind of died down on the pound. If you want to zoom in on smaller candles, you can see resistance has formed, okay? Right there. It could do a little more climbing. If you were looking to scalp, you could set up a sell position on the 5-minute candles below this little support. Okay. We see that there's a small support here. It's ranging between here and here, here and here. So because there's not a lot of time left before the markets close, you could scalp maybe using 5-minute candles. If it breaks this little support, you could take a quick sell. If it breaks the resistance, you could take a quick buy up here. Now, certainly you could set up a buy stop up here and a sell stop pending order and cover it either direction. Okay. I think there's potential for some movement that way on the 5-minute candles to do some scalping for a breakthrough up or down. If you're starting to look further away, we're kind of running out of time before the end of the market day, because remember, markets are cutting short a bit today too. Okay, so if I promised you some fundamental news, and so what do we see on the markets? I see mixed news. Okay, I see a article here about trade tensions. right? Futures dip as end of year rally cools off. But then I also see the euro gains and the sterling shines with growth optimism. So we've got a mixed bag of stories here as the year is coming to a close, which is not necessarily unexpected. Positive momentum on the markets, end of year pullback, kind of a mix of things. Perfect time for technical trading because the fundamental news is kind of a collage of year-end stories, not really relevant to exactly what's happening right now. Mixed emotions, selling off to take profit at the end of the year. All of these things are going on. So a time like this, many times the fundamental news, you can kind of throw it out the window a little bit and trade on the technicals like we were just looking at, which is the whole point of this webinar, right? So it fits right in. We see global stocks end 2019 close to record highs. So talk about conflicting stories. You know, investing.com talking about record highs. Here talking about futures dip that was earlier this morning, obviously. So within less than a 12-hour time period, you've got talking about futures dipping and reaching record highs within the same day. Okay, so technicals would have been paying well on breakthroughs on gold, on the pound, obviously, the euro, the indices, all of them technical trading, as we looked at already on the charts, would have worked very good today and still could. Okay. All right, great, everybody. If you have any last questions, let me know. Otherwise, I think it's a good spot to kind of stop. I just pulled over. Yet, thank you, Alex and Ebert and everybody else. Happy New Year to everybody. I wish you a happy and prosperous 2020 and a healthy 2020. And don't let the market stress you. If you stay on top of things with a good strategy, I have confidence all of you can profit well in the new year. As we go out, I just wanted to show you on our website. If you go to trading platforms, go here with your mobile device, right? Go to our website, go to trading platforms, and here's the AvaTrade Go link. Okay, you can click on AvaTrade Go to take you to download the AvaGo app. Then you can take a look at that Ava Protect feature as well. Could be something in the new year that could work out well within your strategy. All right, everybody, thanks. Happy New Year. Don't do anything too crazy tonight, okay? All right, bye for now.